We saw lower lows and lower highs today with the S&P down 0.33%, closing at 56.9331. We've nearly filled the big gap up from Monday's trading session, the bottom of which is sitting at 56.68. The largest gamma exposure concentration on a net basis continues to hover around the big 5700 strike. We've been watching the 50-day EMA sitting at 58.34 as a potential next target after we complete this leg down that we're currently on. We see a potential for a bounce out of this zone here once this gap is filled back up into the 50-day EMA. We continue to see outsized volume coming in at higher strikes, the 5750 and 5800 strikes, despite the retracement over the last 3 days. We're seeing quiet volume come in at the 6,000 level every single day, nearly 50,000 to 100,000 contracts coming out. And we're seeing the gamma exposure concentration maintain at that 6,000 level. So it remains to be seen whether this is just a dead cat bounce. So far, the trend remains intact. However, we are watching for a potential break of this trend back into this negative gamma exposure, which is sitting all the way down to the 5,500 level. That would put us back down to the recent lows. So we're kind of walking this tightrope here along this trend line. So far it's been holding, ever since this March 13th low, but we have to be cognizant of the potential break and the negative gamma exposure that is sitting between 5,500 and 5,700.
Anthony, in addition to the good points that you made on SPX and where it stands right now, I wanted to add a couple of things. We have these big negative GEX clusters on SPX, 5650 and 5675. Those appear to be the largest clusters on any strike for tomorrow. So the presence of these clusters doesn't mean that we necessarily hit those clusters, but the fact that they are the largest ones that we see on tomorrow's expiry has my attention and causes me to not be surprised if we see more downside tomorrow before we see upside. And I did want to point out very briefly on the VIX, even though SPX and the VIX did look somewhat bearish, if we look at VVIX, it actually had a very large reversal intraday. At one point, it was almost 10 points. We had a high of close to 96 and the low is just below 87. It's also above the hole. Volatility is not necessarily signaling that it's time to short volatility, but we do see conflicting signals between the bulls and the bears regarding where we're headed next.
Thanks, Sean. And we were talking about the gap that nearly filled on the S&P. Well, looking at the Qs, actually, we see that today did fill the gap left over from Monday's big gap up. And the beginning of that gap is sitting at the big 480 strike. We've been highlighting the importance of this level over the last couple of weeks as we were kept bouncing right underneath that 480 strike for nearly 10 trading sessions before finally breaking out above it during Monday's session. So obviously the last 2 to 3 sessions coming back down to test that level. No surprise there. We'll see if we can actually get a bounce back up into the 50-day EMA. On the Qs, it's sitting at 563 currently. So we'll see if we can get a bounce up there for the first target. Again, same thing. If this trend line breaks, we see more downside coming. The next level we would be watching out for would be right around the 465 level on the Qs. And a break below that level would be a big red flag and warning sign for further downside to come potentially. And everything seems to be coming right into a very pivotal zone. So again, all eyes on the gamma exposure data, all eyes on the options data. We're monitoring this in real time, which by the way, you can join our community Discord. We're posting market analysis and our assessment of the data in real time. Check out the link in the description below.
Thanks, Anthony. DIA looked a little bit more bullish than some of the other indices. Today, even with the downside, it still closed above the whole moving average. I don't like that the whole is ascending so rapidly because it's going to make it easier without price showing a lot of momentum. It'll make it easier for price to end up being below the whole. And that, in my methodology at least, is a short signal. So definitely watching that. But we closed at 422.94, which is above the whole, and we had volume at 435 and even 437. This big GEX cluster at 430 that's been there for a few days and is the largest one on the map. So DIA seems to be maintaining the possibility, at least, of a more bullish resolution to the weakness we've seen in the last few days.
Thanks, Sean. I wanted to take a look at Netflix next, closing today at 976.72. Pretty flat on the day, but if you look at the uptrend that started back on March 10th, it has been sharply rising, heading towards, even tagging a couple of days ago, this 1,000 strike. This is the largest gamma exposure concentration. We're seeing substantial volume coming in right around that 1,000 strike as well. We actually added an option strategy targeting that 1,000 strike in our Geek portfolio, which, by the way, members have full access to see all the moves we're making, as well as our trades in real time. You can check that out. I'll put a link in the description below. We are starting to see some gamma exposure growing at the 1100 strike, although it's still in the early stages. I see a lot of congestion up here at this upper dealer cluster zone. Of course, this is where most of the net positive gamma exposure is concentrated, and this is also a support and resistance line going back to the beginning of January. So really important level. Our bet is that we see continued consolidation around this 1,000 level for the next couple of weeks, which, if that does happen, would benefit our premium collection strategy on Netflix.
All right. The last ticker I'm looking at today is FCX, Freeport McMoran. And this is another one of those names that's shown positive momentum despite the market's weakness. We have the Keltners that are basically heading higher. We have positive GEX, and more importantly, in terms of the exact potential target, we have big GEX at 45 and also at 50. Now, I will say most of the positive GEX that we see that's at higher prices is concentrated in the May timeframe. So, it is more of a swing trade, but that's still not very far away. The big picture here is we have a positive chart. We have positive GEX. So definitely looking at buying the dips on FCX.
And you can access our gamma exposure dashboard and our algorithmic trading strategies by heading over to geeksoffinance.com. We just added 3 new algorithmic trading strategies. These strategies are based on our quantitative methodologies. They have between 60 to 70% win ratios and have beat the market 4 to 5x in the last 3 years. So definitely something you want to be sure to check out. Link in the description below. Members also get access to our community Discord. We've got a ton of great traders in there sharing their own trade setups and market analysis as well. You definitely don't want to miss that. Link in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.